All right, I realize we have quite a few people that are still joining, so just want to, we will get started now. It's a little after 2 o'clock, so good afternoon, everybody. We'll get started here. My name is Serene Wilkie, and on behalf of everyone at Investors Community Bank, we'd like to welcome you to today's discussion on the Paycheck Protection Program forgiveness. This is actually the second webinar that we've offered on this topic. And for those of you who had the opportunity to attend our previous session, we've had quite a few changes since then. And so the purpose of today's event is really to explain what those changes are and how they will impact you and your business as you start to apply for the forgiveness on the PPP loan. We're also going to take some time to walk through a demonstration of the digital application process. And time permitting, we are going to make sure we can get through as many questions. We know we had a chance to pre-screen some questions, and there's some questions coming in on the session. And so we'll open up the session for additional questions and answers near the end of the session. So really after this next hour that we'll spend together, our hope is that you'll feel more informed and confident in how Investors Community Bank is going to help you navigate through this forgiveness application process. And we have a shared goal with you in getting your loan fully forgiven. So just a few housekeeping items before we get started. As you've probably determined, we will keep everybody in a listen-only mode. And we are expecting a few hundred participants on this call, but this session is being recorded and we will make it available to those who registered to play back at a time that's convenient for you if you want to listen to it one more time or at another time and date that's good for you. We've also, as mentioned, we proactively collected questions in advance so that our panels can be prepared to address most of your concerns during today's presentation. So I'd like to just get right into it, and I'd like to introduce our panelists. Dave Coggins is our Executive Vice President and Chief Banking Officer, and Carl Spey is our Assistant Vice President and Business Credit Manager. And both have been very actively involved with the Paycheck Protection Program here since the beginning of April, working through the process, the frequent changes. And we'd like to start off with the session by covering some of the changes that came about with the Flexibility Act that was signed on June 5th. So I'll turn the event over to Dave now.
Here. Thank you, Serene. It's our pleasure, as Serene indicated, to bring this information to you. There's a lot of ways we've been trying to communicate a lot of the changes. Many of you have spent time searching the web for updates and things like that. We've tried to boil that down into hopefully an easy to understand set of updates and guidance that can help you with the process. Many of you are anxiously awaiting a chance to start submitting your application, and we want to give you as much help in that process as possible. As Serene indicated, our goal is to help you get maximum debt forgiveness. It'd be wonderful if we got all of our customers able to qualify for full forgiveness. And so we want to, and we think some of the law changes that came about with that June 5th Paycheck Protection Program Flexibility Act is helping a lot in that regard, and that's what I'd like to touch on now. The first change you've heard about and you've seen possibly is the new Easy Application. 3508 is the application that SBA has provided. And the first round, you saw the long form. It's a little daunting, and the Easy is quite a bit simpler for certain people that qualify, and we'll talk about what those qualifications are in a minute. A second change is now you can use a 24-week covered period instead of just the 8-week covered period that was allowed in the initial program. So that's a big change that Congress saw fit to provide you. Gives you a lot longer to spend your payroll protection program funds, and I think it will increase the likelihood that many more of our customers will be able to qualify for full forgiveness. Another change was the lowering of the amount required to be spent on payroll costs from the original 75% of PPP funds down to 60%. And we'll talk about how that's calculated and what some of the implications of that are. There was also a deadline in the initial act of June 30th, by which time you had to rehire any furloughed employees to get your headcount back up to what it was before you had those furloughs. And it changed that date from June 30th to December 31, or the end of your covered period, whichever comes first. There was a loan deferral period in the original program of 6 months. So from the time your loan was originated to 6 months later, your loan interest and principal, those payments were deferred. It changed that, and we'll talk about the changes. It gave you more time of deferral. There's another change or clarification in how the 24-week covered period now impacts salaries and ownership reimbursement caps. And there are caps that apply to each scenario. It also allows borrowers who get forgiveness or receive forgiveness to defer their payroll tax payments as a separate kind of non-loan related issue, but it gives you some flexibility there. Next. Okay, let's talk about the 3508 Easy Application. Many people have said it's not that easy. It's got still, as Carl will walk through, the things that you're required to do to apply in terms of the gathering of information, providing proof, doing the calculations, all the things that prove out your forgiveness still have to be done. The application itself is simpler and more streamlined, but it doesn't take all those responsibilities off your plate. So there are 3 criteria. Any one of the 3 would qualify you for using this 3508 Easy Application. First of all, if you're self-employed, an independent contractor, or a sole proprietor with no employees, you can qualify for using that application. Number 2, if you didn't reduce salary or wages for any employee in an amount greater than 25%, and you didn't reduce the average full-time equivalents, or we'll throw around this FTE term, that's what it means, or the paid hours between January 1 and the end of the covered period, you qualify. And the third thing is, if you didn't do that, and you were unable to operate during the covered period due to compliance with COVID-related guidance, things like OSHA and other regulatory bodies that put restrictions on your business and your ability to fully operate, then you can qualify for using the Easy Application. But as I said earlier, you're still required to submit and retain all the same backup documentation as required with the longer form application. Next slide, please. So a question you're maybe asking or have asked is, should we use the 8 weeks or the 24 weeks? One of the things we found that probably prompted the 24-week extension or the 24-week covered period in Congress was that the 8 weeks was really tight for a lot of borrowers to spend all of their funds in that 8 weeks. It took a lot of things to fall right to make that happen. With 24 weeks, most of our customers that have these loans can spend all of their PPP funds on eligible expenses in a 24-week period, given the fact that the calculation on how much you got was based on 2.5 months worth of payroll. The period starts when the loan was dispersed. And in our case, most of you got your first loan proceeds about the time that the loan was closed. So that date is certain. And then we'll talk a little bit about what's some of the rationale for your decision as to which of those is needed or it works best for you. If you can do it in the 8 weeks, there was a time prior to this past Monday that it was uncertain as to whether or not you'd be able to apply before the 24 weeks are up if you use the 24-week covered period. That now got clarified, so that took a little bit of that uncertainty off the table. But for most people, if they got it easily spent within the 8 weeks, they're ready to apply, and we're getting ready to show you how to apply. And but if you need a few more weeks to spend all of the money, you now have that option. There's also, if you use the 8-week period, you can still use what we talked about in our last webinar, the alternative covered period, which is basically aligns the covered period with your payroll dates, because that was posing a problem without that option for many payroll, for bi-weekly payroll companies. There was a new IFR, which stands for Interim Final Rule, issued June 22nd, that clarified the application for forgiveness can be made before the 24 weeks are over. We think this is kind of a big deal because there was a lot of people asking, do I have to go the full 24 weeks? And it's a big deal for us because this gives us a chance to help you get your forgiveness and know that you've got it sooner. So now you have that option when your money is used up and you meet all the qualification requirements, you can apply even if it's only 10 weeks in to your covered period. You must have used all the funds and eligible expenses, and we'll talk more about what those are and do a little refresher on that. And you have to make sure you aren't impacted by that FTE reduction quotient. There's calculations you have to do that basically try to prove that you didn't reduce your workforce. And if you did, you got a certain amount of your forgiveness may be at risk. So that's something that you have to make sure. If you laid people off, you have to have brought them back to not be affected by this particular requirement. Next slide, please. The payroll cost, we talked about, the old rule was 75% of your funds used have to be used on eligible payroll costs. That got reduced down to 60%, which gives you more flexibility. You can use as much above 60% on payroll costs as you'd like, but you can't go below it. If you go less than 60% on eligible payroll expenses, then the pro rata share of the loan that's below 60% will not be forgiven. So let's use an example. You get a $100,000 loan with 50% of it spent on eligible payroll costs. Assuming $45,000 was spent on eligible non-payroll costs, that means $10,000 or 10% of the loan amount would not be forgiven and would have to be paid back as a loan. Some people have asked, if I owe something, I don't get it all forgiven, say it's a few $1,000s, can I pay it right away or do I have to make loan payments on it? You get to decide. You can pay it right away or you can let it amortize out, whatever you prefer. The non-payroll costs, just by way of refresher, there's 3 things that you can use the non-payroll portion of your funds on, that up to 40% that we talked about earlier. One is utilities, and there's been, that's typically your normal utility costs, internet service, telephone, water, electricity, heat, things like that. And then I've got, this portion is wrong. Transportation is one of the utilities. I missed the correction, but the second thing is rent. And so ignore the transportation, that's up in utilities. The second thing is rent, and that's just normal rent that you pay on facilities that you're renting. And the third is mortgage interest, which is interest on mortgage debt, real estate mortgage debt, or other secured business debt, things that are secured by a general business security agreement or a general farm security agreement. Any of those kind of things would qualify as mortgage interest. And if you, in this particular case, there are costs that were incurred, that were paid during the covered period or incurred in the covered period and paid before the next billing cycle. So those are the non-payroll costs, and I apologize for the error. We'll correct that before we publish this out on our website. A longer covered period means it's going to be easier to get full forgiveness without relying on non-payroll costs. So that's important to note that we think that you have a better chance of being able to get full forgiveness. Next slide, please. Another change was a rehired timeline now has been moved out to December 31 or the end of the covered period. The old rule gave you until June 30th. The new rule gives you until December 31. So that's important. If you had some real significant impacts and having to furlough people, that gives you a lot longer time to bring them back. There's a couple of safe harbor provisions on this particular rule as well. If you try to rehire and you can't, people said, I'd rather take the unemployment, I got another job, and you just can't bring the workforce back. You make those offers, they get rejected, and all of that is documented, then you can qualify for a safe harbor on this particular provision. You wouldn't have your forgiveness reduced. Or if you can't operate at the same level of business activity as you did before February 15th because of COVID-related compliance guidelines. This is what I mentioned earlier. It's things that regulatory agencies like OSHA or the CDC or the health department put some restrictions on you. You can't operate like you normally did. Then that's something that you could give you a safe harbor. It's not been made clear yet what kind of proof will be needed to show this. We think it's probably going to have to be some financial type proof, but on that particular instance, we'll work with you if that does apply to make sure that we agree that you qualify for that safe harbor. Next slide, please. Loan deferral changes. As I mentioned before, the prior rule was 6 months of deferral after your loan was funded before payment started. The new rule is you get it deferred until SBA pays us the amount of forgiveness. So you apply for forgiveness, you qualify for the your end of your needed covered period, and then you apply for forgiveness, we approve it, SBA approves it and sends us the money. That's whatever amount isn't forgiven at that point, that's when you have to start amortizing payments. So that does, in many cases, give you quite a bit longer time period of deferral. The point of this particular change was, under the old rule, there was a pretty good chance you were going to have to start making payments before you knew for sure that your loan was going to be forgiven. And then there was going to have to be a provision that would allow for you to get reimbursed for that, and it was getting messy, and so they just made this change to the rule that took that out of play. Another rule included is that you must apply for forgiveness within 10 months after the last day of the covered period used for forgiveness. Now that's still a long time, but the old rule had no deadline, and so now the rule has a deadline, and you need to comply with that. Next slide, please. Clarification of caps. This applies on the 24-week covered period. The prior rule limited the amount of payroll paid to employee to $15,385, and that was based on the fact that no one employee could be paid more than $100,000 and have that salary be included in the payroll calculation of forgiveness. The new rule now allows this to go up to as much as $46,154, which is, as the old rule was based on 8 50-seconds or an 8-week covered period divided by the number of weeks in the year. The new rule is 24 50-seconds or the amount of covered period in a year of that 100,000. So it does give quite a bit more flexibility to use up more payroll expenses and get your full forgiveness. The other thing is that owner's compensation replacement, which applies to self-employed partners that are receiving K-1 self-employment income, independent contractors, sole proprietors. there is a provision that allows for you to repay yourself a compensation replacement that was capped at $15,385 for the 8-week covered period. It now goes up to $20,833 for the 24-week covered period. The reason that that isn't this $46,154 that is allowed for employees is that the most you could get was the $20,833. So they're not going to allow you to repay yourself more than you got in the original application for that portion of your loan. Next slide, please. Payroll tax deferral. This is just a throw in. It really doesn't affect your loan, but the old rule made borrowers who receive PPP debt forgiveness ineligible for the payroll tax deferrals allowed by the CARES Act. And the new rule now makes you eligible. So this is something you'll work with your accountant on, and they'll know more about this, but it does give you that ability now to use those deferrals on payroll tax that you were ineligible for that under the old rules. Next. Just a quick refresher on the old rules. We're not going to go into them in a lot of detail, but just as a reminder, your eligible payroll costs include cash compensation, health insurance, retirement programs, and the employer share of payroll taxes. Now, cash compensation is your typical wages, tips, things like that, but it also could include things like special bonuses, hazard pay, things like that. Health insurance, a lot of people have asked, does that include dental and vision? We've not found anything in the guidance that specifically excludes them, but we've not seen anything that says they can be included. So now with the new expanded rules, it seems like that's going to be less of an issue. You're not going to be stretching as hard as you might have had to before to find eligible expenses now that you have 24 weeks of payroll to qualify. So I think that one becomes kind of a non-issue for most. Retirement programs is another, and then the employer share of payroll taxes. Your eligible non-payroll costs includes utilities, and here I got it right, it's rent and mortgage interest. So, and they have to be paid during the covered period or incurred and paid by the next billing cycle, as I mentioned earlier. And that full-time equivalent reduction quotient calc those rules didn't change except the time frame for calculating it if the 24-week covered period is used. And the last thing is that if you received an EIDL, which is an SBA economic injury disaster loan grant up to $10,000 in that EIDL program, that grant amount must be deducted from your eligible forgiveness amount. And there's been some back and forth on this particular issue. In the application, you're required to say whether or not you got one of these, and they're going to be able to cross-check your name with your with whether or not you got one of these EIDL grants. The thing that the rules said was that if you use the EIDL grant to pay for the same things that you used your PPP loan for, that's why there was not double dipping. But it's not easy to figure out whether you used it for the same. So I think you can just count on the fact that if you got an EIDL grant, it's going to be deducted from your forgiveness amount, and that's probably going to be the end of the story. Next. Now I'd like to turn it over to Carl, who's going to give you some pointers on the documentation part of the application and walk you through some of that. Carl?
Thank you, Dave. So we'll go over the documentation that you're required to submit with your application to the bank, as well as documentation that you'll want to retain for your records. First off, the biggest expense or the largest portion of the forgiveness is going to come from payroll. As Dave mentioned, the requirement is at least 60%. And that can be whether you choose the 8-week or the 24-week covered period, or any combination in between. But the payroll cost, since this program was really designed around protecting payroll, that's going to be the largest portion of the forgiveness amount. So documentation that you're going to need to provide if you have employees is a payroll file for the covered period, and then also for the reference period to determine if there was any reduction in FTEs between the two. So this payroll file could be something that you export out of a third-party payroll provider such as ADP, or some type of documentation that shows the amount of cash compensation to employees. Also included in payroll costs are employee benefits such as retirement contributions made by the employer on behalf of the employee, the employer contributions to health insurance, and one thing that we got in the latest guidance that was issued by the SBA is a limitation for what they call owner employees. So previously it was self-employed, so Schedule C, Schedule F, and independent contractors. That's a pretty easy designation, but they came out and they clarified that even S-Corp owners, their health insurance is not eligible to be included in this, as that is already considered to be part of their compensation amount. If it's a C Corp and you're an owner, the insurance is still eligible to be included. And then, as I mentioned, the payroll file for the reference period, you have a couple different options here. If you're a non-seasonal borrower, and many of our customers were, it's between February and June of last year, or January and February of this year. Or if you're a seasonal borrower, you can take your pick of any consecutive 12-week period between May and September of last year. And you can, it doesn't have to be the same as your covered period, as far as month to month. It can be any consecutive 12 weeks that's the most beneficial for you. Next slide. In addition to that payroll file, you'll have to also include some tax forms. So if you're a Schedule C or a Schedule F, it'd be the 2019 tax form, and the forgiveness amount is actually going to be applied to the 2019 income, not the 2020 income. So in addition, if you file as a partnership, you'll need to again have that 2019, that's what it's going to be based on for the forgiveness portion. In addition to those tax forms, it would also be the state unemployment insurance reporting. Next slide, please. So outside of payroll, the eligible non-payroll costs, as Dave mentioned, can be for interest, secured business interest. It can be for lease payments, or it can be for utilities. So the documentation that's going to need to be provided for business interest is account statements that show that the loan was in place prior to February 15th, 2020, in addition to the loan statements for the covered period. The business rent or lease payments, we do believe that related party leases, so if you have a real estate holding company, as long as you have a documented lease in place, those are eligible expenses for the forgiveness. So you would need to provide a current copy of the lease and some type of documentation, whether that's checks or a bank statement that shows the lease payments and when they were made, to make sure they were made during the covered period. One of the things that we've been asked is, maybe you held off, and if you had back rent that you're going to pay during the covered period or once you got the PPP loan, we believe that that will be eligible to be included as long as the payments were made during the covered period. But the SBA has not released definitive guidance, but it's pretty clear that you can't prepay any of the expenses. So they have to be incurred during the covered period, or in the case of, if you're getting caught up, if they had to be paid during that covered period. Next slide, please. For utility payments, kind of the same thing. So you need to have statements that show that they were in place prior to February 15th of 2020, as well as statements that show the payments made during the covered period. And that could be in the form of checks, bank statements, or the account statements that show when the payments, when they were made. Next slide, please. So some of the documentation you're going to have to prepare in order to fill out the application form, but not necessarily provide to the bank. So during the origination phase, you had the 2483, which was the origination application, as well as the supporting documentation, which was the 940s or the 941 tax forms, the payroll files. During the forgiveness application, it'll be the 3508 or the 3508 EZ, depending on which way you're filing. Again, with the supporting documentation being the payroll files for the covered period and the reference period, as well as any non-payroll costs, such as the interest, lease, and utilities that are being included. That would need to be submitted with your forgiveness application. Outside of what you provide to the bank, there is going to be some documentation that you want to retain for your records. As Dave mentioned, for the Safe Harbor program, so maybe you had a reduction in your workforce, but when you went to offer jobs back to those people or to rehire them, you were unable to do so. If you can maintain a folder that has written documentation showing the offers were made and then the offer was declined, that won't be counted against you for FTE reduction, but that's something that needs to be kept in writing and maintained in a file. And the SBA has released guidance that this file of documentation needs to be retained for 6 years after the loan has been fully repaid, whether that is forgiveness. So if it's fully forgiven, and as we've mentioned, that's what we hope to have for the vast majority of our customers, it'd be 6 years from the time that the forgiveness has occurred, or if there is a small portion that needs to be repaid as a loan, from the time the loan has been repaid, that would be the 6-year mark. Next slide. So all of that sounds really complicated. There's a lot of dates and documentation that's needed. But what we're trying to do, and our goal, like has been mentioned, is to achieve maximum forgiveness. So we're partnering with the company that we will have an online application process that will be easy and help walk you through it. So now I'm going to turn it over to Serene, and she will demonstrate that for us.
All right, thanks, Carl. While Melissa is transferring presentation permissions over to me, I just wanted to remind our audience that there is a Q&A button available in the event today. So if you're on a desktop, at the bottom of your screen, there should be a button with a little question mark in it. The mobile interface, if you're on a mobile device, should also have a Q&A button. We are capturing all the questions. We've had several good questions that have come in through the session so far, and those are all being captured in our transcript. So we will be able to, if we don't answer your specific questions during the event today, we will follow up and publish a frequently asked questions after this event is over with, and make sure that we address all your specific questions. So I am going to go ahead and share. Actually, I want to get back to the feature and presentation, the slide that Carl was just on before I start sharing content. If you could go back to the presentation, I don't want to miss those screens. So there's some features that are available within the application that'll make it easier for you to maintain the application. There's pull up the screen here. If you could back up to the features. One more back. Okay, so specifically the application, we've had questions in the session today. When is the application going to be available? So today is Thursday the 25th. We're going to be setting up our production system over the weekend, and we expect by Tuesday next week we should have the live application available. So we will communicate that to everybody once we are ready to go, and there will be an update on our website. Just like with the application process, there was a link on our website to apply. We're going to do the same thing with the forgiveness application. So watch for an update shortly and expect to have access after the 29th. There is a self-managed password reset. So and I'll demonstrate the registration process. So you won't have to worry about forgetting your password. You'll be able to manage that on your own. The one thing that's nice about this is you will have 24-hour-a-day, 7-day-a-week access to your application. So anytime you feel like you want to check on the status, you can log in, you can check on your application. There are some automatic calculations embedded in the program that we'll demonstrate for you today, along with automatic notifications. So you'll always be aware of what the status of your request is. There's the ability to upload your payroll documentation, your FTE documentation securely through the portal, and we'll demonstrate that as well. The other nice feature that we have available is that you will have the ability to start your application, save your progress if you're not ready to submit it yet, and you can come back later at a time that's convenient for you and finish your application at a later time. And then for those of you who might be managing multiple applications, perhaps you applied as an individual, but you also are managing a PPP loan that was issued under a related entity, you will be able to manage multiple applications through the same process. Next slide, Melissa. We do recommend that you use Chrome. Chrome is going to give you the best browser experience. We will be publishing a training video. So maybe you don't want to go back and listen to this entire webinar today. What we'll be doing is publishing a video that will just carve out the screen-by-screen directions. We're going to suggest that you have your tax ID number, your employer identification number, or social security number that you use to apply, along with your SBA loan number and the loan amount available when you're ready to start your application. And then I've included in this presentation today the website where you'll be able to find the particular this solution. Next slide real quick, Melissa, is a screenshot of everyone who received a PPP loan would have digitally signed a promissory note. And so you might be asking, well, where do I find my SBA loan number? I've highlighted on the screen for your benefit the SBA loan number that's located on your promissory note. This is a mock example here, but you can see there's a principal amount of the loan and the SBA loan number are highlighted in yellow. So those are the two pieces of information that you're going to want to have available when you're ready to start your application process. So now, Melissa, you can go ahead and transfer presentation permissions. I will then pull up an example of what our portal looks like. And then we will walk through some test transactions, and then you'll get a sense for what how this is going to work. So on the screen here, you can see that it gives you directions to start your forgiveness request, and it reminds you again to provide your tax ID number and your loan amount. I've got some mock information here that I'm going to enter in, and you'll notice it says to enter your SBA loan number from your closing documentation, or you can always contact us if you're having trouble finding that. We'll walk you through that process. You'll also notice here there's the ability, if you've already started an application and you're coming back to finish it, you can pick up where you left off. And then you'll have your email address that you registered with and your password. And then here's where you'll notice there's the forgot password option. So if you can't remember what your password is, You can enter in your email address, click the forgot password, and we'll do a reset to your email address and help you walk through resetting your password. So I'm just going to enter in some test information here. I've got a test tax ID number and a test SBA loan number. And once those two pieces of information are entered, you'll simply click the button to find your loan. And my screen needs to be reset. And then it's going to ask you to verify the loan amount. So we're preloading our database with all of the information that was available from the SBA on your original loan. So this is just a verification step to ensure that you are choosing the right loan. I know this particular loan this is the dollar amount, so I picked that loan amount. And now what I'm going to do, and you as an end user would enter in your email address and then create a password. And enter it again. And then create your account. Now once you've created your account, it's going to preload your loan amount. You'll notice here, you will see your assigned banker and your assigned banker's email address and your assigned banker's phone number. I'm missing the phone number for this example, but you will see your contact information for your banker here. So it's easy for you to know who to work with if you have questions. But you'll notice here, there's some helpful. So helpful links is going to help walk you through the process. There's also a status bar on the left-hand side, so you'll be able to tell what the status is of your application. I'll draw your attention to the center of the screen. You'll notice you have an option to path. We really feel that a good portion of our customers are going to go through the easy process. And the easy process will make things much, much easier for our applicants. If you won't qualify for the easy process, as Dave outlined in our presentation today, you're going to want to choose the full forgiveness application. But for purposes of today's demonstration, I'm going to skip right to the easy process. So I'm going to choose the easy process path. And you'll notice we're asking that you check at least one option to confirm your eligibility for the easy process. And so as was outlined in today's presentation, there's some requirements for eligibility. Maybe you're a self-employed individual and you did not have any employees at the time of the application. Easy enough, check the box. You could check one or more, but at least one of these has to be checked in order for you to proceed with the easy process. So then if you scroll down, we're just gonna go ahead and start your employment detail. So we start the employment detail, and here's where it pre-fills the number of employees that you had at the time of your application. So when you first originated your loan, you reported the number of FTEs. We're going to pre-fill that for you. Then you simply enter in the number of employees that you have with the forgiveness application. You can choose your payroll schedule. In this case, I'm just going to choose biweekly. Here's where if you had an economic injury disaster loan advance, you would enter that amount. I believe most of you might not have to worry about that. If you did have an idle loan, you would enter in the dollar amount and the application number. We are also going to pre-fill your loan disbursement date. So the disbursement date is the first date that the loan funds were available to you, and that's really the start of your covered period. So some of you might have asked the question, how do I get the 24 weeks? How do I choose 24 or how do I choose 8 weeks? Here's where you can toggle in between either the 24-week period or the 8-week period, and the system will automatically work through the calculations for you. There's also an option if you still choose to use the alternative covered period, you would enter in that information here and then again, choose your period. For a very small number of you who have a PPP loan in excess of $2 million, it will ask that you check this box. And then we're also going to capture, there's a revenue field, and this is your 2019 annual revenue. The reason why we're collecting this is for community reinvestment purposes, so that we can identify the annual revenue requirements. Next, we can move into Schedule A. Here's where you can enter in your cash compensation. I'm just going to work through and enter in some fictitious numbers here, but you would use your Schedule A worksheet as a guideline. Now, when you're entering in your numbers, simply hit the Save Application. And Save Application should be, you can save your application along the way, but once you hit Save Application, watch what happens here in box 10. Box 10 automatically calculates the payroll costs by adding lines 1, 4, 6, 7, 8, and 9 together. And here again is a little reminder, save your application. If you choose Save Your Application, it will automatically calculate and populate this value. And then you can move on. I will also point out that these little question marks are help guides for you to help you understand what should be entered in each of these fields. Next, we can move on to the payroll and non-payroll costs. And if you have payroll costs from Schedule A, it will pre-fill on this line. And then here's where you have the option to enter in your mortgage interest payments, if you have rent or lease payments, if you have utility payments. If you don't want to include that, you can certainly do so. And along the left here, you'll see as you proceed through your application, it's going to tell you how much of your amount is expected to be forgiven and how much of your loan, if any, will be expected to be repaid based on the calculations that you've entered. So again, it doesn't need to be overcomplicated. You enter in your payroll documentation or your payroll numbers, your non-payroll expenses, and then all we need to do is on the next screen, we ask that you upload the supporting documentation. So the supporting documentation may include bank account statements, as Carl went through in detail. Maybe you have tax forms, receipts, canceled checks, and we have a little guide here to walk you through what documentation might be helpful. Here's where you can name your file. You can choose the file. So you simply browse out to your computer, grab the file and upload it. So I'm just going to upload some test FTE documentation, and I categorize it here. So I can choose payroll, FTE, non-payroll, or maybe we need some other piece of information. And once you select your file, you can simply click the upload button, and we're calling this an upload bucket. So all of your documents can get dropped into this upload bucket. If you uploaded something by mistake, you can delete it. If you want to see what is it that you uploaded, you can click the view button. And you can always, again, save the application. So if you're getting some documentation, but you don't have it all, you can always save, come back when you have your 941s or whatever other tax forms or supporting documentation you need. You can always come back later and add those documents at a later time. But once you've got all your documentation uploaded, then you can proceed to the summary. And you'll notice my loan is $109,000. It's estimating that 100% of my loan is expected to be forgiven. Here's where I can submit my application. I want to indicate what the name of the person is, who's going to be signing the 3508 form, the actual application for forgiveness. And I'm going to just put in my name as a test, and it says enter the information and click save. And now I'm ready to submit my completed application. Are you sure? I am sure. I'm going to hit OK. It brings you to the next step screen. So this screen walks you through what to expect next. And the next steps are obviously that we will review your application in the back office. We will ensure that all your supporting documentation has been uploaded, and then send you a copy or a 3508 application via DocuSign. And I'm going to let you relaunch the presentation, Melissa, so that we can take a look at what a DocuSign package will look like. And then we will continue with some Q&A here. All right, so I'm transferring presentation permissions to you, Melissa, if you want to relaunch that PowerPoint.
Give me 1 second and I will have that up.
No problem.
There we go.
All right, so what you're seeing on the screen here is the example note, but if you go to the next couple screens, Melissa, there's this advance again, please. So again, we reviewed the what happens next, but this is the screen, one more screen, advance forward, please. There you go. So this is the 3508 or the 3508 Easy signed electronically. So what's going to happen is you're going to get an email asking you to digitally sign the 3508 form, just like we did with the origination phase, except this is going to be the forgiveness application. And once we get that back, then we will proceed with transferring your application request to the Small Business Administration so that they can proceed with their approval process. So that's the general process, and I know this was a quick overview. Go ahead and advance the slide, Melissa. We will, again, post a video with some further direction on our website, and the helpful links within the software will be very useful and helpful for most users. Carl and myself will be available to help with any technical issues that anybody runs into. And what we'd like to do is take some time to open it up for some question and answers, because we have about 7 minutes left in our time frame here. So I would just like to start with a couple of quick questions for Dave and Carl. And the first one that we're going to throw out for consideration is, my accountant says that I may not be able to use my health insurance premiums because it is not a group plan. However, the farm pays for both families' premiums. Can I use them? So can I use my health insurance premiums?
I can take that one. So the guidance clearly states that it needs to be part of a group health insurance plan. Additionally, there's another question here related to that, and I had mentioned it briefly, but it kind of glazed over it, and I think it's important. For S Corp owners, the health insurance component, or the employer paid portion of the health insurance, is not allowed to be included for S Corp owners. And that is very clear in the guidance, and that's one of the things that we just received. So it needs to be part of a group health insurance plan.
Okay, thanks, Carl. We have another question that asks, will business expenses paid with PPP funds be deductible by the business, and will PPP funds that are forgiven be tax-free income to the business? So maybe we start with the first question, which is, will business expenses paid with PPP funds be deductible?
Yeah, I can take that one, Carl. First of all, big disclaimer, we're not CPAs. We don't claim to give tax advice. So take this based on the guidance that we've read. But first of all, when the PPP program came out, there was seemingly clear guidance that these funds would not be considered income. And so therefore, that was all good news, and everybody took that at face value. A little later, probably a month later, the IRS came out with guidance that basically said, yeah, we won't tax your income, but we won't let you deduct the expenses that you spend the money for. So in essence, kind of got you through the back door that way. The thing that a lot of accountants said that I've heard talk on this, expect that issue to be corrected. They think that the intent clearly of Congress was to make this a non-taxable event, but at the present time, we have this conundrum. The other thing to note is it's not going to be, especially now that they went to the 24-week covered period, it's not going to be uncommon for people to have the loan given to you in the first year, taxable year, but the taxable event for it would be when you would have it forgiven and yet your expenses and the loan are going to be in different years. So there's some work that you need to do with your accountant on that one, and stay tuned, as it's not, it's believed that there might be a change in sentiment on that by the IRS, but don't quote me on it because I don't have any authority to change the IRS positions.
Okay, and then does that answer, oh, Dave, I'm sorry, the tax-free income portion of that question?
Yeah, I wrapped it all into one answer,
Okay.
so I covered
All right.
both.
All right, another question that came in from our audience is, do we have to submit statements from ICB or for our mortgage or checking accounts? So what we're referring to here is the non-payroll related expenses. It's highly likely that most of your payroll expenses may cover the majority of your forgiveness, or the forgiveness of your loan. However, if you still need to add additional documentation for non-payroll costs to make up the difference and get to that 100% forgiveness, if you have your statements and everything available, you can certainly upload that to the portal. If you need some assistance with that, you can certainly message us through the application system, and we can pull that information on your behalf and upload it to the system.
But I think it's safe to assume, Carl, that we're not going to go out looking for that stuff. If you don't include it, and we've got people that are going to be processing almost 900 of these. And so the more you can do to help make our job easier, big appeal there, but recognize that there's a lot of applications we have to process. The more you can do on your end to make our job easier, the more smoothly this process will go for you and us. So we'd encourage you, even though you may have your mortgage, we hope you have your mortgage with us, we would like your help in getting those documents uploaded so that they're all in one place and we can easily find them and process them.
All right, thanks, Dave. One other question that came in was related to the digital signature process on the 3508 form. Does the person who signs the 3508 need to be the same signature as the original loan application? Really, what that person who signs the 3508 doesn't necessarily need to be the same person, but it needs to be somebody who's authorized, properly authorized for the business. So if it's a different person, I don't think that, and I think in this case, the reason being was because the original person has retired or may no longer be with the company, but there's probably somebody serving in that capacity for the organization in a role of authority, and that person has to certify when they're signing the 3508, you as an applicant are attesting to the accuracy and the certification that the proceeds were used as outlined in the application. So we just need to make sure that it's somebody who can confidently attest to that when they're submitting the 3508 application. So we are coming up to 2:59. We have exactly 1 minute left. Again, I just wanted to remind everybody that these questions are going to be captured within the transcript of the event. And we do intend to follow up and answer all of the specific questions raised. So please watch our website, and we hope that we've been good with our frequent email communications. And we want, and in the slide presentation that we'll publish, and I think it's on this next screen, Melissa, is our contact information. And so we want to make sure that you feel comfortable, reach out to us. We're here to support you through this process, and we would welcome you to let us know if you have any specific concerns or questions. And then we will be publishing a video available soon, along with a recording of this session. And we'll keep providing you updates as more information is provided from the Small Business Administration. So we'd like to thank you for your time today, and thank you for taking an hour out of your day to attend today's session, and we hope you enjoy the rest of your day.